13 threes off. Not really shooting many of them off the dribble. So
good morning, good afternoon, or good noon. Either way, happy Thursday, happy New Year, Merry Christmas, happy holidays.
flights.
Whatever anyone is celebrating. Guys, please mind your background noise.
It says his personal apology is the first step of making.
1 second. Just muting some people out who have background noise. Okay. So great. It is now just on noon and we are going to get started. I think we're probably going to be a small group today because of the holidays. But just to get started, does anybody have any questions about anything that we have discussed in previous trainings or about the system in general? Okay. Just admitting people really quickly. So just admitting people. Okay, awesome. So we are going to get started. I do have a lot to cover today. Today, I wanted to talk about objections. So an objection is not necessarily, and I'm not going to do it. An objection is usually, I have more questions about this and need further information. So we're going to talk about a lot of different things that could come up when you're meeting with LifePlan 360 client, and just different ways to approach certain subjects and be able to address concerns, really. So the first thing I want to just admit people, the first thing I wanted to address is the way that we are positioning ourselves. So when you're talking to people, how many people here are insurance agents? I've got one. Anybody else?
Yeah.
Okay, we've got a few. Okay, so I never, ever, ever introduce myself as an insurance agent. People will get off on the wrong floor if you are in an elevator to get away from insurance agents. I always position myself as a financial consultant for a couple of reasons. One, nobody knows what that means. They'll probably ask. Two, because what we do as insurance agents is simply to sell death benefit. What we do as financial consultants is much more of what we're actually doing. We are solving for people's lives. We're solving for their financial goals. And in the process, we protect them with life insurance and other life insurance products. Does this sound familiar to people? Yes,
Yeah.
no, maybe?
Yeah.
Yes? Okay, good. So that is really why I position myself as a financial consultant. On a side note, you cannot say that you are a financial advisor or financial planner if you are not series licensed. So let me just admit people. So definitely, get your elevator pitch together and make sure that what your elevator pitch is within the confines of what you're legally allowed to say per your licensure. If you happen to be series licensed, you can use those terms, but most of us are not, and that is why I go with financial consultant, because that is something that we are legally allowed to say. Okay, so the number one objection I hear a lot is people find out eventually it is life insurance, and whole life insurance is too expensive. Is it? So when I do get this objection, this is a great conversation, and this is something that you should be able to go through with people. I don't explain anything ever. I never say anything. I show people so that they can see with their own eyes, because explanations, people feel, oh, well, I've missed an important detail and they're pulling the wool over my eyes. Nope, I show people everything. So can I prove to you that over time, life insurance will not actually cost you anything? Anybody?
Yes.
Can I prove that? Okay, so let me just pull up the eBiz and I'm going to share my screen. Share screen 3. Share. Can everybody see the Foresters page?
Yes.
Purple background. Okay, awesome. Not now. So if I go to illustrations. So we're going to go through this pretty quickly because there's a bunch of other stuff I want to get to today. So if I'm going here, pull this up. So we're going to say that it is medical. Our example client is going to be 35, non-tobacco, male, awesome. We're going to death benefit and funding. Non-MEC face solve, 75%. Premium is going to be annual. And for the sake of argument, we're going to say that this family is saving $2,000 a month, which is $24,000 a year. Awesome. Riders. Admit people. Okay, we're going to leave all that alone. Because he's 35, we're going to put a 20-year term on it, and we're going to. Oh, what did it do? Okay, and we're going to ignore the lump sum payment for right now, just for the sake of simplicity. Okay. Bless you. And please mind your background noise, everybody. Okay, so we're going to go to the at a glance page. Well, first off, does everybody know how I put everything in? Did anybody have any questions about that?
Yeah, I had a question about that because I
Yep.
was doing one for someone last night, and I was trying to do a 10-year term on it, but it went all the way out to 34 years. So I'm trying to see where I missed putting something in the mode or something for that one.
If you're doing this particular build, so if you're
Okay, so
doing
you
the
did the advantage pay for
FPUA,
100.
what?
Oh, I'm just reading. I'm so sorry.
No worries. Yeah. So if you're doing the FPUA permanent term blend non-MEC face solve, which is how I generally build the bank type things, when you come over to riders, your options are none, term 10, and term 20. So it's probably the build that you're using. If you need some help, call me and we'll work that out.
Okay, thank you so much.
Not a problem. So for this example, we are using the term 20, and we're going to go to at a glance. And for this family, we're putting in $2,000 a month, which is $24,000 a year. So over a period of 10 years, 10 times $24,000 is $240,000. Is that accurate?
Yes.
Okay. So under the guaranteed cash value, can anybody read what we have here at 10 years?
252K.
Is that more or less than what they've put in?
More.
Okay, so at 10 years, we have a guaranteed death benefit of $1.4 million. Has this death benefit cost this family anything?
Nope.
Exactly. So, and this is the guaranteed cash value. So, and that does not include dividends. So they're far more likely at 10 years to be more in the realm of $270,000 of cash value. But I can guarantee this by contract. If you're putting in $2,000 a month, you will have $250,000 at the end of 10 years with a death benefit of $1.4 million. So let's say if they wanted to retire at 65, they're looking at $1 million of cash value and over $2 million of death benefit at that time. Where is the cost? Is whole life insurance expensive?
Nope.
Yeah.
If you know how to set
So-
it up
Right,
correctly.
right. If whole life is set up as a banking build, then it actually ends up having significantly less cost over, actually no cost over time, as opposed to a term policy. So just for the sake of comparison, I want to show what a term policy would cost. So age 35, somebody remind me $722,000, okay?
Got it.
Okay, so we're going to go here. No, we're not. We're going to go here, change product. Your term. It's medical, same client, non-tobacco, death benefit and funding. Shall we go with a 30-year? Or let's go with the 20-year. 20 years are less expensive. Okay. We said it was $722,000, I think, ish.
Yeah. Mhm.
Something like that. Okay. Solve for premium annual. Thinking. Let's take a look at the at a glance. So this is going to be $784 per year times 20 years, right? If I can find my calculator, that would be awesome. Okay. 784 times 20. So this policy has cost us $15,000, right?
Yep.
Yes.
Okay. Let me ask you this. Does the death benefit ever increase?
No.
No, the death benefit does not increase. In our other policy, the death benefit increased, right? We at age 65, we had $2 million-ish, I think.
Yeah.
Yep, okay. So at age 65, in this policy, keep in mind it's a 20-year term, what do we have? If they're 35 now, at 65 on a 20-year term policy, what will they have? They don't have anything, right?
No. Mm-mm.
Because this policy expires when after age 54. So at age 55, this policy will expire. They've spent $15,000 on it and they have no death benefit. And at age 65, the annual premium jumps from $784 a year to just under $5,000 for that level $722,000 term policy. So really, which one is more expensive? The whole life banking build or a term life policy?
Term.
Right. So that is how I show people. And I literally show people. I don't talk about it. It's much easier for them to see it themselves.
Yeah.
Because if you don't show it to them, again, they feel like they've missed something, that they're having the wool pulled over their eyes. They're not going to argue with something that they can see themselves. Okay. So does anybody have any questions on that before I move on?
No.
Okay. Oh, there are a couple of questions in the chat. Sorry, I am doing multiple things. So even at my age, a life insurance tax-free dollar costs 5 cents a piece. How many tax-free dollars do you want today at a nickel a piece? Yeah, exactly. An $11,000 bill, term is expensive. Yep. So that being said, so another common objection that people say is, I already have life insurance through my job. Okay, so let me ask you 3 questions. Is it term or is it permanent insurance? So if it's term, what happens when it expires? Let them answer that. And guys, just please be mindful of your background noise. I definitely want people to participate, but please be mindful of your background noise. So what happens when that policy expires? Would your family still be covered? So, and just, let them think about that. Let them answer if they have a plan for when it expires. Question 2, if you leave that job by your own choice or not by your own choice, people do get downsized. Does that insurance come with you? Most people are unsure of the answer of that. And just for your own edification, it doesn't automatically come with you. Under the COBRA laws, you should be allowed to pay for it yourself, but at that point it becomes incredibly expensive. So most people are going to not take it with them. So, and question 3, does the insurance that you already have through your job build cash value that you could reasonably use to achieve your financial goals? And let them answer that. So, most of the time it doesn't. It's almost inevitably going to be term insurance, which does not inherently build cash value. Okay. And if people have questions, please feel free to jump in. I do have a bunch of stuff that I wanted to cover today. So yes, we are moving very quickly. If you need the replay, feel free to email me at kroads@icanfinancial.com, which I'm going to put in the chat at icanfinancial.com. Just wanted to double check because I have a bad habit of spelling my own name wrong because I can't type. Okay. So next objection, just send me a quote. I don't have time to have a meeting with you. This is more of a, when you're doing a little bit of prospecting, you'll get this. And this is where, I mind my own time. I don't send quotes ever. I'm unable to send a quote. I don't deal in death insurance. I help people build plans to protect all aspects of their lives, build wealth and financial certainty. Please feel free to let me know when you can squeeze in an hour or so to achieve your own financial freedom. So this is something that, if they don't have time to sit down with us, or if they can't make time, they don't see it, and you're wasting your time trying to chase them. So, okay. When, this is what I do. When you can make time to sit down with me, feel free to let me know. So yes, the answer is a little irreverent, but at the same time, you need to have conviction in what you do and have respect for your own time as well. Because with quotes, people definitely don't understand what it is that we do, and they're always going to be able to get if they're looking at it in terms of death insurance, they're always going to be able to get a lower quote somewhere else. The question is it actually protecting their whole life? Is it a birth to death planning tool? And no, for most people, they wouldn't be able to do that with just a quote. Plus, with a quote, you haven't taken into account their lifestyle. We rearrange everything through the software. We're rearranging everything that they are currently doing. We've just turned their financial life on its ear, and we have not asked them what they can afford. I never ask what can you afford? What's in your budget to spend on life insurance? I don't ask that question ever. We rearrange everything to make sure that the plan fits the family, not that the family can afford the plan. That's a very important distinction. Also, you're going to have people who are really, really excited until they find out that it's life insurance, to which they're going to tell you that they have a pre-existing condition and they don't qualify for life insurance. So this is where you kind of need to do a little bit of delicate digging. See if you can find out if they have been declined for insurance in the past. See if you can find out exactly what the condition and or medication is. Let them know that you'd be happy to do an informal underwriting for them with the carrier to see how their condition would be considered, because I've had like one common one. I've had a couple of people tell me, oh, I have IBS and I'm on this or that medication. Okay, well, what is the medication? How do I spell the name? What is the dosage? And what is the current situation? What has your doctor said to you about this condition? Is it stable? Is it progressing? And I'd be happy to call the carrier, do an informal underwriting, and we can find out if we can proceed without actually having to go through the whole process. And in a lot of cases, the carrier isn't particularly concerned about certain minor things. Like if their high blood pressure is well controlled on their medication, then it's fine. There are a number of conditions that could play into that. However, if they are truly uninsurable, you can also find out if there's another party on whom they can build the bank. A spouse, an adult child, a sibling. I actually had one family who, because of the build, which for anybody who's unfamiliar with build is the height weight ratio, the primary income earner would not be insurable. However, his wife would have been. So we ended up moving the entire bank onto her, which, not gonna lie to you, it was a little difficult getting that through underwriting because he made like 4 times what she did. So the size of the bank was significant. But having a conversation with the carrier about, this is what we're trying to achieve for the family. The husband is uninsurable, so we're trying to build the entire bank on the wife. And no, it does not match precisely with your general income requirement rule, but this is what we're trying to achieve. So always have those conversations with the carrier and let them know up front, like, this is what we're trying to achieve. You can even put a little note in the application that, yes, we understand that this level of insurance is going to be considered high for this income. However, this is what we're trying to achieve. Those little notes go a long way with the underwriter because you're not trying to hide anything. You're being very open with the objective. Okay, so other objections. I have a savings account to cover my final expenses. I don't need life insurance. Okay. Traditional life insurance covers only death. We're putting together a plan to cover all of the events that could or will occur in your life that could affect your family's financial future. Also, I'm not suggesting that you purchase life insurance, but when we did the stress test, the only financial vehicle that had all of the qualities that you wanted in your bank was, in fact, life insurance. Are there any more questions that I can answer about how it works that would make you feel more comfortable? And let them answer. Have that conversation, because chances are this is the first time that they have ever heard of using life insurance to create wealth. That is a very common question. Why have I never heard of this? Why aren't more people doing it? Quite frankly, it's a severe lack of financial education. They don't know how it works. They don't know the history of it. Another great resource that I love to give people is this book, Money, Wealth, Life Insurance by Jake Thompson. It's a very quick read, and give them simple little examples like, have you ever heard of Disneyland in California? Everybody has heard of Disneyland in California, but if it hadn't been for life insurance, nobody ever would have. So, and if you guys have not read Money, Wealth, Life Insurance, get on the software, get yourself a copy, because there's a PDF right in the software that you can either read yourself or share with clients. And really internalize some of those examples that you can just rattle off for clients, because it's amazing how all of a sudden people are very interested in doing what Walt Disney did or what Ray Kroc did. And for anybody who doesn't know who that is the he founded McDonald's, or J.C. Penney, or the owners of Pampered Chef. All of these little tools and examples, people can relate to, and it makes it much more real for them. Okay, great. This is probably my favorite objection. Dave Ramsey says that whole life is bad. Has anybody ever heard this?
Yes.
Yeah. Okay, great. Do you know specifically what Dave Ramsey has said about whole life insurance? And they don't. Okay, Dave Ramsey specifically said that whole life insurance is evil. Do you know why? Again, they don't. Dave Ramsey said that whole life insurance is evil because it only guarantees you 6% growth per year. Just let that hang for a minute. Let me ask you something. If you were guaranteed to have 6% growth per year in your accounts every year, never having a decline, would you be upset about it? And let them
Of
answer.
course.
Yeah, of course not. They would be thrilled. They'd be over the moon. They're, whatever their answer is, great. Okay, so why is it then that life insurance is bad? Or whole life insurance is bad? So this is a perfect example of I never say anything. Have I said anything to this objection that I said?
No.
No. I repeated what Dave Ramsey said and I asked them questions. So this is a skill that we all need to get very, very good at, because as soon as we say anything, we now have an opinion. We are now giving advice, and nobody wants to take advice, guys. Nobody. Think about it. When was the last time that you got advice? Just think about that for 1 second. What was your initial reaction? Did you immediately want to not do whatever was suggested because somebody was telling you that this is a good thing and you should do it?
Exactly.
Exactly. That is human nature. So I never offer opinions. I never say anything. I let other people be the expert who are saying something, and then I reference them. That way, I am the impartial party that is just the guide through this system. Does that make sense?
Yep.
Awesome. Okay. Another big objection that I get with relative frequency. I don't want to mess with the money in my 401k. That's fair enough. And if that 401k is with your current employer, there probably isn't a whole lot you're allowed to do with it anyway. However, for that rollover 401k or IRA from a previous employer, especially with the market the way it is right now, I just wanted to show you an option to stem the bleeding. I can't guarantee that you're going to make 8% every year, but I can guarantee that your account will never lose money ever. And when the market grows again, so will your account. Does that make sense to people?
Yeah.
Yes.
Okay. Yeah, that's kind of the pitch for the setup with the annuity rollovers, because our clientele is really high 30s all the way through their 40s into their low 50s. Chances are these people have some sort of savings in retirement funding somewhere. Maybe it's with their current employer, maybe it's with a previous employer. But one of the things that we do is protect them from loss. And the right now the 401k is people are scared stiff about their 401k, and I've had people come to me that are just absolutely in love with their 401k. And I've had people come to me who are like, yep, I just lost $17,000 in my 401k. But everybody knows intrinsically that they're not actually making that 8% a year that their financial advisor seems to tell them that they are making. Because there's a huge difference between 8% APR and yield. The cryptocurrency market is much worse. Yeah, well, I mean, that's still in the stock market. Any way you cut it, that's in the stock market. Just as an aside, has anybody ever heard the advice, diversify with your money?
Mm-hmm.
Sure.
You've heard this, right? So let me ask you something. If you have some money in a small cap fund, and you have money in cryptocurrency, and you have money in another hedge fund, and you have money in an aggressive growth plan, and you have some money invested in foreign currencies, where is your money?
In the market,
Equities.
Yeah. Is any of that not in equities or in some sort of market situation?
All
Does
that
any-
is, all that's in speculation and equities.
Right. So let me ask you this. Is any of that diversification?
Nope.
So would it be prudent to, because all of that is a house of cards built on a foundation of sand, right?
mhm,
So would it be prudent to take that foundation of sand and drive, 20-foot cement pylons into it and build a nice concrete foundation to your financial house?
Yep.
Wouldn't those be guaranteed products?
Yes.
And then we can layer some speculation on top of that. And if we lose it, we at least have our solid foundation.
Yep.
We can live in our foundation, right?
Yep.
Right. So that is another thing that we can bring in about the diversification. So, if we're diversifying, shouldn't we diversify into, keep the 401k that you have where it is, because you can't do anything with that anyway. But the things that you can make stable and solid and guaranteed, should we maybe look at how to do that?
Yep.
Right. So, and again, I'm asking questions. I'm letting them answer. I'm not giving advice. I'm not saying anything. I make, I kind of lead, but I don't actually make a declarative ever. Okay. So I just want to be mindful of time because we've got some things to cover. The market always comes back. Yes, it does. The market does always come back. There are only two guarantees that exist with the market, and that is that the market will go up and it will go down. The question is when and how much. Let me ask you this. What if 2020, 2008, 2001 happened a year before you were planning on retiring?
Then
Let the
you're
answer.
done.
Okay,
you're not retiring.
you're not retiring. Okay. Now let me ask you this. What would happen if you retired a
Oh,
year before 2020, 2008, or 2001 happened?
You're unretiring.
Could you even go back to your job?
Probably not.
Would you be a Walmart greeter at that point? So let me ask you this. Would a position where the worst thing that could possibly happen to your account is that you look at your annual statement and see that you have exactly the same amount of money that you had the year before, would that make you more comfortable?
Yes.
Anybody? Yeah. So, yeah. So why are we not looking at those things? If we could put you in a situation where you are building wealth that is guaranteed to grow. It will plod along at a very steady, guaranteed rate. And any of the retirement funding that you've already put together, we're moving that into a place where it's at very least guaranteed to not lose money. Would that be a more comfortable position? Would that help you sleep at night and not have to take antacids every 20 minutes because the market's tanking? Yeah, because that's a major stressor for a lot of people. I mean, to be quite honest with you, we could draw a direct line from financial distress and uncertainty to death. I'm not kidding you. Does anybody know what the leading cause of death in the United States is? And it doesn't matter if you are Black, white, middle income, wealthy, poverty stricken. Do you know what the leading cause of death is? Heart attack. Very close. It's actually heart disease, but heart disease leads to heart attack. So 10 points to Gryffindor. Does anybody know what the leading cause of heart disease is?
Financial stress.
High blood pressure.
It's actually chronic stress. So chronic stress does lead to high blood pressure, and whoever said financial stress leads to chronic stress. So we can draw a direct line from financial trouble to death. This is a problem in American society. And this is what yes, diet and stress. Exactly. So no matter how you cut it, everybody said this, everybody said stress. So what we do is we help people design plans to remove that stress, because there are guarantees, there are certainties that we can build into their financial lives. And that's what we do. Does that make sense to people?
Yeah.
Yep.
Okay. Okay, great. Another big objection. I have plenty of life insurance. I don't need more. Possibly true. But is it the best insurance for you? Is it achieving what you need it to achieve? Is it creating wealth for you? Is it creating financial stability for you? Is it protecting your family against the possibility not just of your death, but in the case of a debilitating illness?
Mm.
I've actually had clients sitting across from me who, between them and their spouse, had over $4 million in death benefit. They are currently working on a plan that would involve a 1035 exchange to cash out some of those policies for whole life banking policies, because yeah, they are so overinsured, but it's not guaranteed to make them money. It's not guaranteed to protect their lifestyle and their child in the case of God only knows what. So yeah, they're in that process. So yes, there are people that you will sit across from who are overinsured. But it's not about being overinsured. What?
Were they permanent policies?
They were permanent policies, but they're not building the cash
Right,
in a guaranteed way.
right.
So, and this is one of the reasons that I say that IULs are not really designed for the banking concept.
Right.
Because yes, an IUL in theory has the potential to grow cash faster than a whole life build. That is very well true. However, if you're trying to use it as a bank for fixed things that you know you want to do, like send your children to college, if the market tanks, yeah, you're at a zero. You know, they always say that zero is your hero. But here's the thing, the expenses inside that policy still need to be paid.
Right.
So if you are not making any return this year and the expenses inside that policy still need to be paid, could you lose money?
Yeah. Starts eating at your cash value.
It
Yep.
starts eating at the cash value. Okay. So you have a couple of bad years right as your second child goes to college. So you now have 2 kids in school. It's costing you $50,000 a year to send those kids to school. You're not building any cash value, and actually your cash value is decreasing. Could that policy disappear on you?
Yeah. And also, I think the premium is going up every year too.
It could. It could.
Yeah.
Mhm.
So is it prudent as financial consultants to put our clients in a non-guaranteed product,
No.
especially if our goal is to reduce their financial stress?
No.
So I'm a big proponent of, you know, the guarantees.
Right.
I like guarantees. You know, 4 to 7% every year is a great place to be, especially if you know you're never losing money,
Mhm.
because that will compound over time and build significant wealth.
Yep.
So,
And Kendra, they say if an IUL loses money every 2 years, you got to run an in-force illustration to see where you're at.
Right.
Yep, precisely. And I'm not saying that an IUL is a bad product. I actually do write them myself. My nephew has one, but he's currently 3 years old, and we wrote that when he was, 6 weeks? So, you know, on a kid, you can't write a whole life bank with a term rider and a PUA. You can't put term on a kid. So to start that with an IUL to build something for them, you know, if they're now 2-3 months old, that has 17 and a half years to grow before they're ever going to need money for anything. So that is a great way to get them started with an asset. So the IUL does have a place in financial consulting, but I wouldn't personally use it to build a bank with. Does that make sense?
Mhm.
Yep.
Mhm.
Okay. Another objection that I've gotten before. You're pushing this because you're a life insurance agent. I'm actually not. I do have a license to provide life insurance products to consumers, but I'm a financial consultant. Life insurance isn't the only thing that I do. Also, I have a fiduciary responsibility to do what is in the best interest of my client without regard to my own financial gain. If I didn't think this was to your benefit, I wouldn't sign my name to the application. I have told clients that I will not write a particular product for them because I do not believe it is in their best interest. And if that means losing a sale, then it does. But I take my fiduciary responsibility very seriously. And I'm very serious about that. I have actually told clients no, that I don't think that what they are trying to accomplish will be accomplished by a particular product. And this is very, very relevant to people who are like, but I want a bank, but they are not financially ready for a bank. I have actually told them no.
Yeah, Kendra.
Yeah.
Yep. I've ran into that situation before, but then I told them, you know, if that's what you want, I'll get it, you know, for you, but I'll give them the like a disclaimer or a written say that you want this, and you know, so you're not responsible for it. So they say, and they think about it and they say, you know what, I'm gonna go with your idea, you know.
And
So
if that works for you,
yeah, sometimes
that's
it
awesome.
does.
I have
Yeah.
something I personally like to do is to set people up to get the bank.
Mm-hmm.
but I'm not doing it for them right now.
Right.
I
said
actually,
that-
I've had 2 this month, actually, that I will set them up with a term, a fully convertible term that, like, for a family that has too much debt to get out of right now, but they need coverage. You can do that term to set them up so that it is convertible to the bank when they're ready. But now they're getting out of their debt, and they're gonna check back with me every few months to make sure that they're still on target, that they're still on, that they're still working toward that goal of getting a bank. But I don't want to run people so close to the line that they're going to have to take on more debt if something happens. Notice I say, well, actually, when something happens. Notice I say when, not if, because something will happen. It's just a matter of when, what it is, how much it's going to cost. There's always something that will go wrong. So you never want people to put themselves in a position, and with our blessing of that bank is going to not just blow up, but cost them money, because they will have lost everything that they put into it if they let it go. So we don't want to do that. So setting them up with a term policy that is fully convertible to a bank, they are now using the snowball method that we teach them to get out of their debt. And we are working around Parkinson's law number 2, which says that expenses rise to match the available income, so that we are always redirecting those dollars. Give those dollars a job. They need to work as hard for them as they need to work as hard for us as we do for them. So we're recapturing those dollars constantly. Now they're out of debt. Now what? Now we can build them a bank. They have that term policy that we set up for them a year, 2, 3 years ago, that has been protecting them in case of, God forbid, something extreme happens. And now we can convert that term policy to a whole life bank, which is what they wanted in the first place. Does that make sense to people?
Yeah.
So, and that is a separate training in and of itself. That is a very quick way of explaining that. But remind me at some point, we will go through and do all of those things. And also, I have told people this, that I'm not looking for a quick sale, that I want them to think of this relationship as more of a marriage than a quick fling. This is something that they should feel will support them in good times and bad, as opposed to someone that they went out with a few times, didn't really get on with, and never saw again. So I want them to feel comfortable reaching out to me if they have questions. I want them to feel comfortable, letting me know what's going on in their life. I want them to know that we're always available for them. Definitely, they should understand how it works and be able to operate the system on their own, but they have the support of their financial consultant when they need help. So, yeah. Next objection. Are you sure it's really safe? Would you agree that banks are really good at making money?
Yes,
Anybody? Yeah?
Yeah.
Okay. Shall we take a look at how they do that?
sure.
And I will literally go into the FDIC website and show people how to pull up a profit and loss statement for whatever bank we want to look at, which because of time, I'm not going to show you how to do now. It will take a few minutes. The FDIC has actually changed their website to make it more difficult for us. Yay. So we will go over that. It's a little bit more complicated than it used to be, but it is still something that we can show people. The profit and loss of any bank that they want, the assets and liabilities, how much money they have in real estate versus how much money they have in life insurance products. And something that might be useful is to just be able to look those up on your own and have a few numbers that you can rattle off. For example, I know that Bank of America has $19 billion in real estate holdings, but they've got $24.5 billion in life insurance holdings. So if banks are putting their money in life insurance, if we want to build wealth and create financial freedom, should we do what the banks do?
Yep.
So, and this is one that this last one is one that you are going to get. And frankly, you're probably seeing it yourselves because most of us are self-employed and our income fluctuates. So my income fluctuates. What happens if I have a bad month or year and can't make the full payment that we see here? So this is where I bring up, I'm going to share my screen. Share screen 3. Okay. So we're going to go back to our, can everybody see my screen first off?
Yeah.
Okay, good. We're going to change. Really? Ugh, I think it logged me out. 1 second. Illustrations. Yeah, it logged me out. Bear with me 1 quick second. Okay. Advantage +2. Death benefit and funding. So if we're running an annual. Oh, I didn't put in medical. If we're running an annual policy for them, let's say they have, what did we say our other client was doing? $24,000 a year? 24,000.
Yeah.
Awesome. Okay. So we're coming to riders. And for the sake of this example, we are going to say that this person had a lump sum of $30,000. Okay. So $30,000 minus $24,000 is $6,000, right?
Mhm.
Okay. So that $24,000 is going to pay year 1 premium. So all of that $30,000 is actually going in year 1. So I'll show it to you. Yep, right here. So we've got $30,000 going in year 1. Do we see that?
Yeah.
Okay. So I want to, did I actually? No, I didn't, but it's fine. Come on. Create and preview reports. Okay. So we have $30,000 going in year 1. So what that means is that year 1 is paid, right? Yes?
Yes.
Okay. So now we can continue to pay into what we call the PDF or the Premium Deposit Fund. So we're going to pay into the Premium Deposit Fund $2,000 a month, every month, because that's what makes most people feel comfortable. They have a monthly cycle, a monthly financial cycle of all of their bills and everything else, right? Yes? Anybody?
Yes.
Okay. So we're going to continue to do this, but let's say that somebody has a really bad month. They just call up and say, I don't want to make a payment this month, but they can still the following month. Maybe they had a great month. Now they can pay $4,000 instead of $2,000. So they have that flexibility to do that. The $2,000 a month just makes it easy to do, but they don't actually have to make payment every month. Like sometimes you'll be coming across maybe a farmer who only gets paid once a year when they sell the harvest. That an annual payment might be most comfortable for them. They don't want a monthly thing that they have to keep track of. Or a teacher. Depending on what district they're in, teachers only get paid 9 or 10 months of the year. So something that they can budget, that they only have to pay for 9 or 10 months when they're making money. And then the other 2 months, they don't have to make a payment. Something structured like that might be significantly more beneficial to them. Also, I wanted to show you guys this. So we said that our annual payment is $24,000, right? Yes?
Yes.
Mhm.
Yeah.
Okay. So what we actually have to pay is the whole life expenses and the term rider expenses. So our whole life expense on this is $2,400 a year. Our term is $310. So basically, we actually have to put in what, just shy of $3,000 a year. So if they were having a really bad month or a really bad year, they don't have to put in that full 24,000. They can reduce it down to the minimum of what they have to put in to support the death benefit. That being said, their cash value is not going to be as high if they reduce what they're putting in for savings, but that's true of any savings vehicle. But it is possible, and they can make that up the following year if they just have a really bad year and they just can't this year. But they, the rest of that $24,000, so right here we've got 21,000 something going into the paid up additions rider, which is where the cash value grows, which is where the cash value lives. But we do have that ability to be a little bit flexible, which should also help people feel a little bit more comfortable. And in this example, we've also built a little bit of space. Maybe they have a banner year and they have extra money that they don't know what to do with. Well, they can put an extra $6,000 a year into this. And if I scroll down to, it's like 12 or 13 here. So we've got $24,000 a year going in every year, but we have $30,000 going in year one. If I scroll up here, the 7-pay, which is the absolute max that you can put in without mecking it, is $30,000. So for the rest of these years, we have $6,000 of space. So it works either way. If they're having a bad year, they can drop it down a little. If they're having a really good year, they can bump it up some. They have space to do that. And that is really the object of making that very clear, is that, yes, we're trying to build this to fit your lifestyle, your financial picture, but it is flexible because life happens. That's a fact. Does that make sense to people?
Mhm.
Okay. So it is now 2 minutes to 1, and I wanted to leave just a little bit of space if anybody had any lingering questions. Anybody? Okay. So very much, make sure that we're taking advantage of the contests that we have going on. Make sure that you're getting on the software. Email me if you have any questions, comments, concerns, need help with a client, and we can take care of that. Again, I will put my email in the chat box, kayroads@icanfinancial.com. Yes, Happy New Year, everybody. Be safe, have fun. Anybody who has not registered for boot camp yet, make sure that you're doing that. Any other general announcements I had? Definitely, really your homework is to have a Happy New Year, and come next Tuesday, which is the first business day of 2023, hit the ground running. Really, make sure that you're getting in your business plans, so that somebody else can hold you accountable for your goals for the year. And you know, if there's anything that I can help you with, please feel free to let me know. And send link to Myron, email me offline. I have sent that to you at least twice. So yeah, let me know if anybody needs any help. And with that, I say Happy New Year, and I will see you all next year.
All right, have a great one.
All right.
You
Have a
too.
good one.
Bye-bye. Have a good
all right.
one.
Bye, everybody.
Bye.